Hello and welcome to Buy Africa, the show where we focus on investment opportunities around the continent. I'm Tsepo Modiba, and thanks for joining me. Tonight, I'm joined by Neville Mandimika, Africa strategist at Rand Merchant Bank, to take a look at Zambia. Neville, thank you so much for joining us.
Thanks for having me here.
Let's jump straight into Zambia. Let's lay the scene in terms of where we find ourselves right now at this moment from a economic perspective, and then maybe drill down a little bit into what the investment implications are.
Okay. Well, we're getting increasingly bullish on Zambia at the moment.
That's one of our favorite words, just for the record on the show.
Should I say it again? We're getting increasingly excited simply because there are a lot of things that are working in Zambia's favor at the moment in the last, call it 6 to 7 months compared to where Zambia was, a year ago, where the rhetoric around Zambia then was centered around, elections that were coming up. So there was a high political risk premium there. Copper prices were, on the decline, and, the IMF was just, a speculation there. But now, fast forward a couple of months later, the whole rhetoric is around, the IMF, what's that going to look like, fiscal consolidation. So all of these factors are beginning to excite investors, and us certainly, in the sense that, there's a surge in sentiment in the right direction, which is a good thing.
Right. Let's talk a little bit politics and policy. What's the outlook like on that front? Does this IMF or potential IMF deal mean a little bit more certainty, given the terms and conditions that come with it?
Well, certainly, if we look at say the Ghanaian case, where a couple of years ago they got into an IMF program. Subsequent to that, you saw a lot more bullish sentiment. You saw a lot more investment coming into the country. So we're expecting the same sort of thematics going into Zambia, specifically from fiscal consolidation perspective. They obviously need to reduce things such as their recurrent expenditure, because the civil servants wage bill accounts for over 52% of the budget, which is on current levels is extremely high. But now, the expectation is that that is going to be reduced significantly. Fiscal debt obviously has to be reduced at over 50% of GDP, with a large portion of that being skewed towards dollar-denominated debt. It places it in a very precarious situation. So, from that perspective, we're expecting some of those things to be restructured and get some sort of fiscal consolidation underway.
Now, that's almost austerity type talk on the fiscal side. Is there potential that we'll start to see some sort of stimulus for the real economy to stimulate growth?
You certainly start to see some of that, because one of the things that concerns us about Zambia and some of the other African countries is the extreme dependence on on a particular sector. So in the case of Zambia, extremely dependent on copper and copper-related products. So when you get growth rates of 3%, etc., it's extremely lopsided because it's dependent on one sector. So from that perspective, the expectation is that there'll be a lot more diversification of of sectors feeding into the growth numbers. So things such as agriculture is a long hanging fruit for them. Developing the services sector. So all of those things, we're hoping to start to see some investment into some of the non-traditional sectors, if we can call it that.
And I like framing this question, but has, I guess, the recent dip in commodity prices, will that actually be a blessing for Zambia long term?
It's a blessing in disguise, in the sense that there's a lot more conversation now, and it's rather unfortunate, really, that the conversation around growth diversification tends to happen at the bottom of the commodity cycle.
Always.
So policymakers unfortunately tend to get a bit complacent at the top of the cycle, where things are honky dory, so to speak. Now that things have turned down, the conversation begins. So this downturn is almost a good thing in disguise. That you're going to get a lot more diversification, which is what we're hoping to see. But that in itself, it's a 5-10 year proposition. You can't diversify overnight.
All right. So in terms of, I guess, the underlying sectors, you touched a little bit on it, on the ones that stand in line to benefit. Are there tangible things that we're really starting to see that speak to agriculture, as an example, being a potential rich source of investment?
Well, at the moment, I mean, of course, a lot of it is still, plans that are underway. But, again, we always turn to the situation whereby, a lot of the sentiment that we're seeing now is in anticipation of the future. So from, the 1.2, 1.5 billion, that may come in IMF loans and then subsequent money to that, our expectation is that, you're going to start seeing, investments into sectors that we talked about, like agriculture, for example. But a lot of it obviously is still rumblings underway.
So what does the Zambian government need to do? What do we need to see from that Zambian economy over the next couple of years that will take the sentiment from just sentiment to reality?
Well, I think one of the things that we've seen so far, which excites us from a political front, is that the new finance minister that was appointed a couple of weeks ago, Mr. Matati, he's seen as a technocrat who's got a very good background in terms of trade and commerce, the portfolio that he used to run before, and having him at the head of the finance ministry gives investors a lot more comfort and confidence, that there's going to be some sort of, discipline, engagement with the broader investor community. So post-election, we've seen that, which is a good thing from our perspective. But again, everyone, we're talking here about, the IMF deal and how good that is going to be. But a critical component in that is that there has to be execution on those things. So, some of the sticky points that, we think will be part of the negotiation would be, things such as, your subsidies in the energy and agriculture sector. And those tend to have socioeconomic ramifications. So there needs to be a lot more political will to actually do what is needed in order to rebalance the economy and get it on a better footing. And
will that political will likely be there?
Well, if you look at the rhetoric during the campaigning phase, right? At that stage, the current president, Mr. Lungu, and the opponents there, it was almost seen as a done deal. That no one was opposed to the idea of an IMF package. So from that perspective, you can start to look at it, say that yes, there is going to be some sort of desire to get the package negotiated and actually out of the gates. So we don't see that being a risk at this stage, that there won't be a deal. But again, it's all about execution going forward.
So should we take it for granted that this IMF deal will be a good thing for the economy overall?
I think it will be, but again, we have to put a little bit of caveat to there, because some of the things, say for example, removal of subsidies, right? That is going to have a short-term effect on inflation, right? So that will feed into prices, etc. But looking at a 5-7 year proposition, the economy will be better for it, because the government finances will be on a better footing, right? And they can begin to rein in the expenditure side of things, which was obviously getting a bit out of control. So there will be some sort of short-term pain, but the economy will be better for it going forward.
Okay, I like this positive stance on the economy overall, but what are the risks? What are the things that as investors we should be looking out for?
Okay.
What are the key risks here?
I think the main one is obviously copper prices or commodity prices in general, right? At this stage, over 75% of Zambia's exports are copper-related exports. So a downturn in the commodity complex and subsequently copper, then you'd obviously see pressure being applied on the fiscus as well. If you look at the growth profile of China, given that China is a big consumer of copper, then what happens in China obviously has got a direct bearing on what happens in Zambia. So the big risks in terms of call it next 18 or 24 months is obviously how those two dynamics play out. But more importantly, from a real sector perspective, you'd want to see, like we mentioned, execution on some of the planned proposals that we're going to be seeing coming from IMF, because it's one thing talking about the IMF coming in, it's another to actually see those things being executed.
And on the currency side, do we anticipate given this bullish sentiment,
Yeah.
that there'll be less volatility in terms of the currency, and what does that mean for the underlying real economy?
Well, we've already seen the kwacha being extremely stable in the last couple of months. In fact, it's actually strengthened on a year-to-date basis, which is a good thing, right? So we're bound to see some sort of stability, obviously, into the currency itself, and that is likely to continue going forward. But the stability almost has to be balanced on two footings. Number one, obviously the bullish sentiment that we're talking about, and secondly, a lot of that stability can be attributed to to the functioning of the interbank market within Zambia. A lot of it is seemingly, traders obviously don't want to move the market as much as they should be, or so there are some of those dynamics that we need to take into consideration.
Tricky question, but
Yep.
Is a strengthening currency actually a good thing for the economy? I mean, you could argue most of their revenue, given that it's copper, is dollar based,
Yep.
and potentially a weakening currency makes them more competitive from
Yep.
a costing perspective compared to their global peers.
Well, what is critical there is the stability of the currency. I mean, of course, if you get a currency which is strengthening, massively, then obviously that has got ramification in terms of balance of exports and imports.
Right.
On the flip side, if you see a currency that is weakening, then obviously that has got issues. So what you want to see in terms of investors and obviously the real economy and how everything else responds is obviously from a perspective of your ability to focus into the future. What the currency is going to be, therefore affording you the opportunity to adequately, budget and plan, etc. So you obviously want to see a relatively stable currency.
Perfect. Let's leave it there. Thanks to my guest, Neville Mandimika, Africa strategist at Rand Merchant Bank. That's all from Buy Africa this week. Remember to follow me on Twitter. That's @Mudiba_Tsepo. And send us your thoughts about the show using the hashtag Buy Africa. From myself and the team, goodbye.